Hi, this is Zak Mir from Master Investor, the conference which is held in London on April the 25th in the Business Design Centre. Book your tickets at masterinvestor.co.uk. Starting off with Bulletin Board Hero number 1, Active Energy Group, where we've got this intriguing chart. We had the spike through 10 pence at the end of January. The highlight here from a technical perspective is the way that you've got all these support points over the course of the autumn, well above the 200-day moving average shown here in black, which means that the stock is very much in bull mode. In fact, we've left a gap here through the 50-day moving average last month as well, which is also a very big, very positive move. So really this pullback from the peak is almost actually the stock overshooting the runway and then having to come back. The view at the moment is that at least while there's no end of day close back below the 20-day moving average of 4.33 pence, we should look for a partial or even a full retest of the 12 pence peak of last month over the next 4 to 6 weeks. The RSI just bouncing off the neutral 50 level to stand at 55 is also a positive. If you're cautious on the shares, maybe to wait for a break of yesterday's high, just around the 6 pence level, as a momentum buy trigger before going long. Next up is a stock which has intrigued over the last few weeks and months, and that's UK oil and gas. Obviously, there was a big breakdown in October, November. Since then, the shares have been consolidating at the lower levels, just below the sort of 0.5 pence or around the 5.5 pence level. Situation now is that there are a couple of positives. Whether they're positive enough to get the shares back on track is yet to be decided, but we're back above the 50-day moving average. That's shown here in blue at 0.4 pence. And also there's been an RSI buy signal with this break through the 50 resistance and then the test of it as support. So if you're a fan of the stock, you're probably going long now or looking to go long with a stop loss just below the 0.4 pence level. Obviously, the initial target here is December resistance towards 0.6 pence. If you're cautious, maybe wait for 0.5 pence, which was the January resistance so far this month, to break as a momentum buy trigger. But as I said, it does look as though we've got this sort of almost what is a bull flag here resting on the 50-day moving average. So that would be probably encouraging enough for most aggressive fans of this company. Next up is West African minerals, where we're seeing a rebound within a falling trend channel from October. Probably what you want to see now is at least an end of day close above the 20-day moving average of 2.96 pence. We just failed at that so far earlier today. That would be a decent trigger to take the shares back towards 4 or 4.5 pence, which was the December trading area over the following 4 to 6 weeks as well. There is also, if you look in the RSI window, there's also bullish divergence as well, which should back the idea of recovery. Stop loss obviously back below the initial February support towards 2.2 pence. Finally, we have stock which is probably supporting one of the best charts at the moment. That's Zincox Resources. The reason for the enthusiasm is this obvious cup and handle formation here. There's the cup and the handle there. We broke that around the 9 pence level, 9.2 pence level, just to start February. And really, the view at the moment is we've got quite a nice setup in the sense that you'd want to follow the shares higher, looking for a top of June price channel target towards 17, 18 pence over the next couple of months. Stop loss for aggressive traders no lower than the 200-day moving average at 9.99 pence. And if you want to sort of trade it less closely, maybe the 10-day moving average shown here in green at 9.16. The shares are overbought, so there's likely to be a pullback towards the 200-day line. But at least while we're above this old January peak here, around the 9 pence level, one would maintain a bullish or a recovery stance here, especially as we have this clear cup and handle formation. That's it from me. More updates at masterinvestor.co.uk.